Mokama Sunday service. What's good, everybody? Today, we're going to continue our new format of just going over the stock picks in terms of the things that I'm intending to swing trade next week if things go well, meaning I get a pullback on one of these sectors or one of these stocks that I'm looking at. I'm Omar Reed. I'm an attorney that happens to trade in my spare time. And I like swing trading more than day trading specifically because I'm working all week and it's hard for me to be in a trade or looking at a screen all day. I would prefer to kind of get into a trade that I don't anticipate getting out of for at least like 2 days to 2 to 3 weeks, right? So here are my picks for this upcoming week, May 26th. My disclaimer once again, this is for informational purposes only. I am not a licensed financial professional. You should trade in conjunction with your licensed financial professional, and do your own research. Trading is risky. You can lose money, right? So, how do I build my watch list? Or how did I build my watch list this week? Um, Before we go to a tool that I use, um, things to watch out for next week. Nvidia earnings are on Wednesday. That has a chance to move the market. Anytime a $1 trillion company is reporting, its earnings have an opportunity to move the market because a lot of our indexes, we're talking about the Dow, the Nasdaq, and the S&P 500 have a lot of Nvidia in them, which means that you know this comprises a huge portion of a lot of sectors, even like the semiconductor sector, specifically through SMH, that ETF, right? Also, we have a release of the FOMC, the Fed's minutes from their last rate decision, right? And the reason why that's important because it just gives us some more insight into how the Fed may or may not cut rates and how soon, right? Right now, just looking at the CME Fed Watch tool before I hopped on here, people are pricing in one more rate cut before the end of the year, right? And rate cuts are extremely important because it uh, determines how cheap money is to borrow, especially for banks. So if that rate goes down and money becomes cheaper, it is easier for companies, specifically publicly traded companies, to grow. So, like looking any FOMC release, any FOMC member talking, specifically the Fed chair talking, can lead to some particular volatility. And that might be good or bad depending on if you're already in a position or if you're waiting to get into a position. Specifically, my trading style, I'm looking for trends to pull back. And some of these, like earnings releases or news releases from the FOMC, could potentially lead to a pullback in a trending sector or a trending stock for me to trade. So that's what I'll be looking at, right? So, how am I building my watch list for this week? Well, I go to koyfin.com, KOYFIN. You want to look at my screen? Here's another view of it outside of my chart, right, or my presentation. So, koyfin.com, you can look at the last month of performance in particular sectors, the last quarter, the last year, depending on your trading style. If this is for long term, it's for short term, even like day trades, right? If you're day trading, you can go look at the last day's performance to see what's trending up for that day or not, right? So, just looking at the last month, just because that's the typical type of timeline that I'm going to be swing trading on. And just so you could do this yourself, I just come into here, go to U.S. sectors, and then tick off the sectors that I tend to potentially trade or watch, right? That I feel like is a good broad section of the stock market in general. And then I'm typically looking at the top sectors or the bottom sectors, depending on what type of market that we're in. Are we in a bull market? I don't know. I feel like we're chopping around right now. I talked about this a couple of weeks ago. Right now, most of the indexes, with the exception of the Russell 2000, the small caps, most of the indexes are above 200 exponential moving average. So it's more bullish than bearish right now in those three particular indexes, not necessarily the small caps. So I'm more on the bullish side of things. And I'm not saying I'm extremely bullish or thinking we're going to, start skyrocketing immediately. But just looking at the last 30 days, you see most of the sectors are positive. Specifically, semis are looking really good. The tech sector is looking really good. Consumer discretionary is looking good. That was mostly Tesla, but look how much it's flattened out ever since. Like I would say over the last week or two. So I'm not really trading consumer discretionary this week. I like the industrials. That looks really good. And then some metals and mining, I kind of want to see that start trending a little bit more. So the top three sectors I'm really looking at this week are semis, uh, XLK or the Qs, and the industrials. Similar to last week, I kind of took financials off just because that's been a little flat to me too, and I want something with a little bit more volatility. So those are the top three sectors that I'm looking at. Let's go back, right? So my top two on the list, GE and Uber, same as last week. Let me go pull up XLI, the industrial sector, right? Once again, like I'm generally looking at the stock market like an ocean. An ocean has currents, it has boats inside of it, right? And so the best thing that I can do as a swing trader is not fight the current, right? I want to see where the market is going, and I don't want to be shorting the market if the market is going up. I don't like, and that's very broad, right? But I also don't want to be going long the market if the entire market is going down or an entire sector is going down, right? So just looking at XLI, the industrial sector, it's been trending higher over the last couple of weeks. So I really like it. I also love it. And I've said this over and over again because many people don't pay attention to this particular sector. And so it's not going to be, I don't think anything in here is subject to Donald Trump saying anything, right? Has Donald Trump said anything? Have they mentioned GE? Have they mentioned Uber? Have they mentioned Caterpillar, Honeywell? No. So I think these stocks don't have a lot of headline risk because I don't think they're on the president's radar. ADP is not on the president's radar. John Deere is not on the president's radar. But I just look at the entire sector with the exception of UPS. Most of this sector is headed in the right direction, which means if I trade one of these on a pullback, specifically I like GE on a significant pullback. Uber pulled back a little bit, but I still like Uber too. If I can get one of these two versus like a Honeywell or some of these other stocks, the reason why I don't trade them is because the options are too expensive. So if you're trading with a bigger account, you might want to look at some of these others too, ADP, Deere, Honeywell, if the options, if you trade with options and they're not extremely expensive, or for your account, I would look at these two, but I just like the entire sector. I also like XLI. The issue is, and just showing you how I trade, if I'm going to the third Friday of June, which is where I'm going to find the most liquidity, even if I wanted to buy calls on XLI, look at the difference between the bid and the ask. This is going a little bit into the weeds, but, and this is for you, Isaac, just in terms of how I'm trading some of these options, that's too big of a spread for me, right? That's a lot of volatility in the options. I love the open interest, but you have to be really precise with your entries and your exits. And a $5 difference between the bid and the ask, right? The ask is what people are selling this for, and the bid is what people are currently putting in orders to buy it for. I usually want this to be like 25 to 50 cents apart, especially if the options are this expensive. No more than 10%, right? Than the ask. So like no more than like probably 80 cents for this. The fact that these are $5 apart, I can't trade this. Even if it sets up for me, it looks perfect. I can't trade uh, options that have a $5 difference between the bid and the ask. That's too much volatility, right? If I'm trying to exit quickly, I might have a hard time exiting if like there's no main if there's a $5 difference between these two prices. And like conversely, let's go look at something that's always liquid like SPY, and look, the difference between the bid and the ask are 8 cents, right? Not that I'm trading SPY next week, but just specifically looking at the difference, right? So that's why even though that sector looks good, I can't trade XLI itself. I need to trade something like GE because GE, the spread is more reasonable, right? It's 30 cents apart, 25 cents apart here. And really, the way that I would probably try to take this down, depending on where it comes down, I probably would trade a spread on like the sell the 235 and then buy the 230 here, right? Personally, me, I would sell a put spread on this particular name. All right, so that is G or XLI, that particular sector, but the two names that I'm looking for is GE and Uber on significant pullbacks, either to an average true range, or I use a specific tool that shows me when it's exhausted. And I've shown that to you previously. Things that I buy from simplertrading.com, but I don't have any affiliation with them. All right, going back to my chart. Next thing that I'm looking at, SMH, NVIDIA, TSM, but before Wednesday, before NVIDIA reports. So really before Wednesday afternoon. So if something is going to trigger on SMH, NVIDIA, or TSM, I would ideally like that to happen on Monday. And then that would probably be a shorter term trade for me, a couple of days max. See if it can run all the way up into earnings for NVIDIA. And then I'm getting rid of that bad boy before Wednesday at 1 p.m. PST, before the market closes, before NVIDIA reports. And I assume NVIDIA is going to blow it out of the water. I own some NVIDIA, but in case it doesn't, like for a swing trade, I'm not really in it for that sort of earnings volatility. I'm in it because of essentially price action is where I want it to be on a trend continuation, but I don't want to take a lottery ticket into NVIDIA's earnings personally. And then lastly, same thing from last week. I like XLK. I like the Qs on pullbacks. I like Microsoft on a pullback, and I like Oracle. Apple's looking terrible right now, so I would exclude Apple just because they're in a fight with the president right now. The president is talking about slapping 25% tariffs on Apple if it doesn't make its phones in the U.S. And I don't know how Apple's going to be able to do that or comply. So essentially, they are in the sights of the president right now. So that's why Apple doesn't look as good as the other names in the tech sector right now, such as Microsoft. Microsoft is looking really strong right now. Once again, just to go show you the entire sector and how I have my charts set up so that I could look at an entire sector at once. And using Thinkorswim, I go to this flexible grid, add all of these particular squares, and kind of organize them like this with the ETF or the entire sector here. And look at Apple. The entire sector is green, and Apple, it has negative momentum. It's a little sideways, but it's looking like it's going to start being bearish. And that's just because it's in a fight with the president. I don't know any other reason why it's not trending like the rest of these names in the tech sector that are doing wonderfully right now, except for maybe CRM over the last day. But everything else is green trend. Green trend. NVIDIA looks good pre-earnings. Microsoft looks good. AVGO looks good. AMD looks okay, right? But even, from its bottom, it's mostly green. CRM's neutral, but green momentum. Oracle looks really good, which is why this is on my list to trade. I might even put Cisco on there as well. Looks good, right? Adobe looks good. IBM looks good. So from an XLK QQQ standpoint, everything looks good. The only issue is Apple and their dispute with the president. If Apple wasn't in a dispute with the president, I would assume it would look like these other stocks, right? What else? We looked at XLK, SMH. Same thing when I'm talking about my ocean analogy. Look at the entire semiconductor ocean right now. It looks green. It's trending upward. Names are going up. So these stocks aren't going to have to fight as hard to go up because everything else in the sector is trending up at the same time. So I guess that's my lesson for today is like, don't fight the current. If the ocean current is going away, it's better to swim with the current than against it. So figure out what's trending, figure out where the current is going. That's why I kind of go use that Koifin tool to go figure out, hey, over the last month, where is the money going? And then once you see where the money is flowing, then that's where you want to put your money. Or if you're shorting something, where are people selling, right? That would be probably the healthcare sector. Let's go pull that up really quickly. Not that I'm shorting right now because I'm not, because generally the market is a little bit more bullish than bearish, at least over the last couple of weeks. But if I were to be shorting anything, here's the sector that I would be shorting. Look at healthcare. All these red candles, all of the red names. If I'm going to short anything, it would be XLV. I'd be shorting Merck. I'd be shorting Thermo Fisher, UNH. However, that's so exhausted, I might be looking to buy it. Same thing with Lilly. Lilly is something I'm looking forward to buy. And that's in my long term, though, not in my swing. That's really it for swinging for this week. I'm looking at GE Uber, SMH, NVIDIA, TSM, XLK, QQQ, Microsoft, and Oracle. And the last segment that I wanted to look at is my long-term watch list. We already kind of talked about one, but another one that I wanted to look at is LVMHF. This is Louis Vuitton, this is Moet, this is Hennessy. A lot of the luxury brands it owns. I think at one point I said 70, 75. I think it's more like 40, 45 brands of some of the high fashion brands that are out there. I could do a little research on that. But look at a 5-year chart. I'm on a 5-year month chart. It's close to a 5-year low. It is officially 75% off, right? Luxury is 75% off. And so, like, a lot of y'all would buy a Louis Vuitton bag that's priced at $10,000 for 75% off and call that a deal, but y'all won't buy the stock, right? The stock is 75% off its all-time high, off $1,000. So my price point right now for it, where I love it, and I think I put this on my chart, I love it between $500 and $450. In fact, I'm gonna put my alert on right now. And
Doing the same.
I wouldn't even, and even right now, it's a decent buy if you ask me, right? They're just having some issues with the tariff issues and things of that nature too. But like, yeah, imagine a Louis Vuitton bag that's 75% off. Some Louis shoes that are 75% off. We'd love to buy that, but look at the stock. So this is on my long-term watch list right now. A good asset that's making money, right? They may have had some bad earnings in terms of top line growth, but they're making billions of dollars a quarter. They're profitable, and like they're 75% off right now. So even buying them now, if you started to dollar cost average in right now, wouldn't be a bad idea, because like I think this is a stock or a company that's going to be around for a long time. It owns all of the biggest brands. Once we get out of this economic funk and people start spending money again, then this thing I think is going to shoot back up to where it was. And if it did, right, that's a huge earnings where you have an opportunity to double your money if it could get back up to $1,000 again. That's what you're looking for, is a valuable asset that is on sale. LVMH looks like that right now, right? The next one, or that we kind of just talked about, was Eli Lilly. Eli Lilly is in the healthcare sector. Healthcare is down because as you've seen, people have rotated their money back into tech, which is more risky. If the market starts tanking or people think we're going into a recession, healthcare is a safety name, is likely going to go back up. I'm looking at this because I need that in my portfolio. I'm heavily stacked semis and tech. The only thing that I would say I have as a safety play right now is Costco, and I have some ETFs too. I have some SPY, but like Costco is really my only, I would say, safety play. It's a consumer staple name where if things start getting rough, the Costco's, the Walmarts, the Pepsis, the Coca Colas of the world start going up along with healthcare and gold, right? So if I had if and bonds too. So if I had to kind of put my portfolio together again today, yes, I still want to be heavily weighted, and this is for me tech and growth because I'm relatively young. But if the market tanks or corrects, I do want some stuff in there that's not going to go down that much or might go up, like a Eli Lilly might, or like a Costco might, which is why I own Costco. So, and I'm even thinking about like if gold, damn, gold even still looks pretty good, right? If gold comes down again, then and corrects significantly, I might throw some gold in there because just my recent trading experience and journey is that when things got rough, those were the three sectors that held up really well. Maybe utilities too, but not so much. Like gold, healthcare, and consumer staples held up really well when the market got bad. So I do maybe want to keep like 20% of that in my long term portfolio just in case. So I'm really looking at Lilly, even UNH. Look at UNH. Woo! Look at that drop. Um, but it popped back up from that low right there. But man, it hit that 5 year low. Um, this is also another one. If it can get through its legal troubles and whatnot, which it probably will, just because it doesn't have a bunch of competition that's its size. It's number one in the space in terms of owning healthcare and hospitals and things of that nature. Like if you're talking about a good asset or what could potentially be a good asset if it gets through these investigations, UNH, yeah, buy a good asset when it's on sale. But personally, I like Lilly better than UNH. So if the healthcare can drop a little bit more and get down to that 40% off, which is my new personal rule, I do not buy anything in my long term if it's not at least 40% off the all time high. If Lilly doesn't correct to around that 650 to 600 mark, I really would love it at 600, but 600 to 650 is really my level for it. Those are my two long term plays that I'm looking at personally in my long term portfolio. If I can buy some LVMHF and if I could buy some Lilly. All right, that's it. That's all I got for you today. Unless you want to go over a particular stock or sector.
No, we good. You kind of went through the stuff that I was looking at. I'm about to just now put a couple little alerts on certain things, and that's it.
Yep. So yeah, and that's what I'm saying. That's my long term. Like that's stuff I want to tuck in my IRA. Like Lilly got the weight loss drugs. They're even testing an Alzheimer drug right now in Australia. They got approval for that. So like if they can,
What
if
is that Olympic? Is that what everybody's doing right now? That Olympic
no, it's
damn shot?
it's
The Lily?
No. So
Oh,
Ozempic
oh,
is owned by
oh,
Novo Nordisk, but I think
who's doing that? So that's not Lily?
Lilly owns, what is Lilly's weight loss? Theirs is. Zepbound, and Monjaro. So there's like there's Ozempic, there's Wegovy. So if you're talking about the competition for weight loss, um, Novo Nordisk, I think they own Ozempic. Yeah. And then they own, I think they also own Wegovy, and then maybe one more. Who's Wegovy owned by? You see, Wegovy ownership. And everybody on weight loss drugs right now. I'm just seeing everybody. Yep. So,
No,
Novo,
I've seen everybody lose weight like that.
yeah. Novo was the first because they were working on diabetic medication. And then it turned out that one of the side effects of the diabetic medication was weight loss. So they're like, oh, there's a bigger market for weight loss than for diabetes. So it turns out that this thing that helps your I forgot what is it, your insulin levels also helps you lose weight, which is good for diabetic patients. So then, oh great, everybody wants this more for the weight loss than for the diabetic side of it. So they developed the shots, the injections. I even think they have a pill that is a little less effective than the injections. But then Eli Lilly started coming up with their competitive solution to it, and I think it's more effective. At least that's what some of the results had said, you know. And so their competitor is Zepbound and Manjaro. Oh, and then it looks like they have an oral one too, one for that you could take in a pill form called Orforglipron or whatever it is, right? So um, that is one of the main reasons why they are making a ton of money right now is because of these diabetes slash weight loss drugs that can be prescribed by doctors, and everyone is trying to get a portion of that market from Ozempic. Ozempic is probably the biggest name, but I've seen a lot of people or heard of a lot of people taking these as well. And Eli Lilly, like I said, they're developing meds for Alzheimer's right now. That's what I've been hearing about more lately. It's called Kasumla,
Okay.
right? And so that I think so if they can slow Alzheimer's or dementia or cure it, I think that's the market. So just imagine all of the people over 60, 65 that would be taking that, you know.
You have a new pharmaceutical drug that's gonna kick.
Yep. So that's why like I love Eli, and that's not the only thing that they have. Like let's see what else do they have? They have, well, that's weight loss, and they have some meds for autoimmune diseases, some cancer meds that they're trying to. I think that was another one too in terms of oncology. So they have a bunch of products like cardiometabolic health, oncology, immunology, some neuroscience drugs, obesity drugs. And so I just feel like now too with like artificial intelligence, it's going to be a lot easier for these massive companies like Eli Lilly to research and develop new drugs in new areas that are going to help faster because they could just test faster with artificial intelligence. But yeah, they got a big lineup of different things that they sell in the pharmaceutical industry. But their main cash cow, or at least the growth right now, has been in the obesity sector. But I think the neuroscience stuff, if they can crack one of these, like what is Cymbalta? And we're talking about this is literally what I'm doing to go figure out if I'm going to invest in a company, right? Cymbalta is for depression, right? So they got a depression medication. What else did we see? Emgality. And then you can go look at their earnings to figure out how much money this is bringing in. for migraine treatment, right? These are useful things that like you can bill your health insurance company for, right? If you have a migraine. Let's look at Olumiant. What is this? Arthritis medication and alopecia treatment, right? Real stuff. Like so like this company is like imagine if you and these are like sticky things too. If you have arthritis or alopecia, you're probably going to have to keep taking this medication over and over and over again, which means you got to keep paying for it, right? If Kasunla can cure early onset Alzheimer's, that's probably going to be something you're going to be taking every day. That damn shot, these Zepbound and Ozempic, they be sticking a needle in themselves every day. And personally, as a person that hates needles, I would rather just go to the gym. But like, man, people will inject themselves every day to not be fat. So yeah, because personally, I don't know. What's Verzenio?
Yeah, I don't trust none of that shit.
Yeah, I know.
I'm
If
going straight to the gym,
yeah,
homie.
unless it's like this. This is breast cancer. Yes, if I had cancer, I would do it, but not like just to not be fat. Like go hit the gym. That's my personal opinion, just in general.
Change your diet. That's it.
Yeah, do your diet and go move more. Literally, just move around more, and eat less. Right? Um, yeah, but don't versus because what? How do you? Let's say, how do you take Ozempic? Yeah, it's a pen. It's a needle. Okay. What about Zepbound? Yeah, it's an injection too. Yeah, people are, and I think it's daily. I'm almost certain it's daily. Let's let's see. Zepbound frequency. No, Zepbound is one time each week. Interesting. And Ozempic. Oh, it's once a week. So yeah,
That's
it's
still a
not.
lot of time. 4 times a month.
Yeah,
That's shit like you might as well be diabetic.
yeah, yeah. So once a week you have to. So it's not a day. It's once a week. But yeah, that's for me. I'm just like, just go to the gym. Cause then you need the medication, and then once you go off of it, you're still gonna gain the weight back if you haven't learned how to eat right or move around. You know.
And it's still a new drug. We don't know the true side effects.
True. Well, no, and I'm almost certain that these have side effects. Like, hold up, let's go look at Zepbound.
All drugs have side effects.
Yeah, I'm almost certain that they already tell you they have them. See, look, nausea, diarrhea, vomiting, constipation, pain, fatigue, serious side effects, right? Kidney problems, gallbladder, pancreatitis, hypoglycemia, allergic reactions, tumors, to not be fat, you know? What?
I'm dying.
what?
That shit sounds
What?
horrible.
What? Now, if you have diabetes, that makes sense to me because like you might uh, pass from that, or if you have a more serious condition, it makes sense to why you would do that. But just to lose weight, when there's a more effective, less harmful way of losing weight, which is going to the gym and eating correctly, you know. But that's just me. But yeah, but that's why I think I like people like ease, right? So you're telling me I can inject myself 4 times a month and never have to go to the gym? Yes, I'm gonna pay $300 a month for that, right? So that's why I think Lilly, the weight loss, all of that, like in addition to the other stuff that they're developing, like them, Novo, I don't know. They're battling right now for supremacy in the weight loss, like because there's 5 or 6 meds right now that you can get that have varying degrees of success. they're trying to develop better versions of them, that sort of thing. But Lilly's kind of like in the race now for that, in addition to all of the other pharmaceuticals that it's been developing, which is why I like them. I like their team. That's something that I would love to have in my long term portfolio. As the U.S. population ages, I don't think that pharmaceutical companies are going to make less money. So yeah, I really like Lilly in my long term portfolio, but I just need it to be at least 40% off an all time high before I buy anything. It needs to be a good asset at a reduced price.
Yeah. So what at what price range are you looking for it to drop right now for Lily?
I told you 600 to 650.
650. Okay, yeah, I see
That
that.
next
All
that
right,
next
cool.
fib level is around 650, so that's when I would think about averaging in. Not think about if it gets to 650, I'm gonna throw some money in there. And but me, like I said, I'm more so trying to average into things now long term rather than just throwing a whole bunch of money down at one price. You know.
Yeah, I remember because I remember us talking about Lily when I think it was even lower than that. So
Yeah.
yeah,
So yeah, like Lily and LVMH is the most discounted. That's the one I'm thinking like, you know what, let me just go put a couple $1,000, go buy a few shares. Uh that's just it's let's go look at that like LVMHF earning. Right. The reason why it's down is top line's down, net income is down, but this is still a company that makes $21.5 billion a quarter, and profit is $2.64 billion a quarter, with some decent net profit margin for being a company that pretty much does fashion, right? Um, so I still, because even if you look at, okay, the earnings have been going down a little bit, like in December, 21.5 billion earnings are just September 24, 21.5 billion, June 20.84. Like, this is a company that still makes billions. The issue that people are seeing is that net income is going down, but is that is that I think is a 75-80% reduction in the stock price justified by that? I don't know. I think people have overdone it on the selling. That's why I'm thinking about coming in right now. Let's see, what's their forward PE ratio? Still a little high, if that's correct. So yeah, it could come down a little bit more. Like I said, to that, what did I have? 450 to 500. This price to earnings, essentially based upon what it earns, where is it trading at? It's at 20. I do think that's still a little bit high. So yeah, that's why I kind of wanted to drop a little bit more. But I think this is one of these companies where if we go into a boom after these little hiccups, these little economic hiccups that we're going through, I feel like this is the company that people are going to start splurging cash again. You know, like they do when everybody's up, everybody's out with the Louis bags and out at the club buying bottles of Moet and Hennessy and stuff like that. So, yeah. And then LVMH brands, how many? Oh, they do have 75. I guess I was saying the correct one, right? Louis Vuitton, Dior, I don't even know how to pronounce that. Givenchy, Givenchy, whatever. Fendi, Sephora. Um, yeah, 75 different brands of like the high fashion brands, cosmetics, perfumes, watches, things of that nature. So I think when they're up, like when everyone's up, the market starts blasting off again. Everybody's gonna start buying the Rolexes and everything again, right? LVMH is gonna be strongly positioned to take some of that because when you get rich, what else do you buy? You know, or when you get some, I not even get rich because a lot of people that aren't rich are buying their stuff. But like when you get some money, if you're trying to floss, what else do you buy? You buy their stuff,
yeah,
right? If you can't buy a house or you can't buy a car, or if you already got your house and your car and you're splurging on something, that's typically what people are splurging on. So yeah, they're discounted right now. So go buy the stock when it's discounted rather than the items.
Smart man.
All right, that's it. Mokama Sunday service, making it rain without the umbrellas here at Sunday every 8 a.m. and on YouTube. Deuces, y'all. Peace.
Appreciate you.
Yep.
Appreciate you.
Yep. Oh yeah, I forgot you was here, DeAndre. Shit, you didn't say nothing all day.
Me too.